Hello, Clifford Bennett, Chief Economist, ACY Securities, and are we still all excited about the US debt ceiling being resolved? It almost sounds like one of those words we just can't bear to hear anymore. And will the rally continue? Friday was a very strong day in New York, well brought up on the fact that it was expected that Biden would sign the bill over the weekend. And by the narrowest of margins, it looks like the US has escaped a debt default. But what a disgrace, really. It is a bit of an international embarrassment all round. And the thing about it is, it's really a little bit like, if you had a lot of credit card debt, you just simply apply for another credit card to make the payments on the previous credit cards. And that never ends well. And that's where the United States is. And as I've pointed out several times before, the debt to GDP ratio is about 30%, near 30% in the 1980s, and now it's 130%. And the last 30% leap is just in the last few years. So there's an upward acceleration in the overall debt crisis for the US economy. We've seen the Japanese equity market break to new highs today. And I think that really is a function, not all-time highs, but breaking higher. And I really do think that is a function and an indicator of that excess liquidity in the world that I keep speaking of. And a lot of US funds are now looking towards Asia. And you'll know that for the last 2 years, if you've been with us for that long, you'll know that we've constantly advocated that the opportunities really were in the Asian region and not in the old first world Western economies of Europe, the United States, UK, and Australia, Canada, a foot in the old first world, a foot in the new first world, but Asia very much the new first world powerhouse, with countries like Brazil coming up quickly. You might be, just while I mention the word Brazil, BRICS has been spoken of a lot lately. There are now tens of countries who are members of BRICS. It isn't just the BRICS anymore. And President Putin was attending a BRICS conference in South Africa over the last few days. So the world really is changing. And I think this always raises a question, of course, particularly with the debt that we're seeing in the US over the US dollar. However, the US dollar has always proven itself to be able to rally on the back of massive uncertainty. And the bringing home of funds by US corporations, the power of that on the US dollar should never be underestimated, as is that old way of thinking, but still possesses many people, and that is around the world, and that is that it used to be the safe haven currency. It isn't really anymore, but a lot of people still think it is, so they'll be going the other way. And also just realize the US dollar can strengthen because the debt situation is so bad that they're going to have to pay higher interest rates to get that money in. So the US will actually be borrowing a lot of money to escape this current debt crisis over coming weeks and months. And a lot of that money will come from offshore, and that will be supportive of the US dollar. So there's going to be capital flows towards the US to now fund that increase in the debt ceiling, and interest rates will be staying high. And we're all well aware that unemployment ticked higher in the US on Friday, a bit of a leap from 3.4 to 3.7%. Really makes no difference to what the Federal Reserve will be doing. But I do see potential surprises to the upside in US inflation data, as we saw today in Australia with the Melbourne Institute, really a big jump from just 0.2% the previous month, their monthly inflation indicator, to 0.9% this month. So that's a big leap. And I think that could actually, just in the back of the mind of the Reserve Bank of Australia, is this ongoing inflation. And I think they could raise interest rates yet again at this next meeting because 7% headline inflation, the Melbourne Institute showing that on a monthly basis, inflation is currently accelerating. It's really not a situation where the RBA, where interest rates are still very low. And I know A lot of borrowers don't like interest rates going up, but they've had a very good run at historically very low levels, and interest rates can still move a lot higher in Australia. You'll notice that a lot of people have only just now, I think it's a year, 12 months, maybe 15 months since we first made this forecast, that the RBA could well go to 4.5% to 5.5%. A couple of people have started forecasting 4.5% in the last week or so. It took them a year to catch up to our own forecasts. People thought that view was really extreme at the time, but it's just understanding how the Reserve Bank operates and the nature of the new economy, which is one where inflation will be high for a very long period of time. And that was the basis of our forecast. So it's nice to get that one right. We don't get everything right. We're probably best in world on that one, as we've been on expecting the Fed funds rate to perhaps peak in the 6.5 to 7.5% range. So interest rates staying high, and I always say staying high for longer, and it's a bit of a market catchphrase now, but in fact, it could be a very long time. So the Federal Reserve, for instance, could keep rates here or higher for the next 12 to 18 months. Similarly, in Australia, it could be 1 to 3 years of interest rates being here or higher as well. So I wouldn't be buying, you might have another reason for buying equities, but I wouldn't be buying equities on the basis of any expectations of central bank rate cuts. They're just not going to happen. That's probably about all from me. Just a bit of a cautionary tale for equities going forward. Oil, of course, looks very strong. OPEC over the weekend, Saudi Arabia in particular, the prince there, he very clear, almost aggressive in his tone, said we will do whatever is necessary to maintain price stability. So the price of oil is going to fluctuate a little bit here, be a little bit volatile on the day. It's already up a little bit in Asia, but pulling back. So a bit choppy, but I do think, and I've been forecasting oil will go higher for quite some time, and this just adds could be a bit of a catalyst to that view. All the best. Thanks very much. Clifford Bennett, Chief Economist, ACY Securities.